Warren Buffett said this particular investor changed his life, and he calls him the guru of investing, a father of investing. I'm talking about Benjamin Graham. Benjamin Graham is apparently the Warren Buffett's teacher in Columbia University, and he wrote the seminal book, The Intelligent Investor. Now, most people are told to go and read Intelligent Investor when somebody said, like, they want to start investing. And this book, trust me, is a very dry, extremely dry book. I mean, it harkens back to 1940s, 50s, 60s, 30s and all. And second, it is like written in a very dry way. Now, I would make it easy for you, and Warren Buffett himself has done that. He suggested 2 chapters, I think chapter 8 and chapter 2 probably. He suggested 2 chapters to read from this book, but let me distill this 3 main lessons, takeaway lessons for you from this book, and that's pretty much what this book covers, right? So let's get into that. There are 3 topics. First one is the concept of Mr. Market. I'll explain in detail. Second is margin of safety. And third one is ownership of a business, the ownership mentality. There's 3 simple principles that you need to take away from this book. Let's get into each of this.
The concept of margin of safety, which originates from Benjamin Graham's earliest teachings, is a core tenet of value investing. You have to have the knowledge to enable you to make a very general estimate about the value of the underlying business. But you do not cut it close. That is what Ben Graham meant by having a margin of safety. You don't try to buy businesses worth $83 million for $80 million. You leave yourself an enormous margin. When you build a bridge, you insist it can carry 30,000 pounds, but you only drive 10,000-pound trucks across it. And that same principle works in investing. Mr. Market is an allegory for stock market trading created by Benjamin Graham. Mr. Market is often identified as having human behavioral manic-depressive characteristics. He is emotional, euphoric, moody, and often irrational. Mood swings between euphoria to extreme panic. He quotes prices to you daily for different businesses. How to handle Mr. Market? Think that he's there to serve you, not to guide you. This behavior of Mr. Market allows the investor to wait until Mr. Market is in a pessimistic mood and offers low sale price. The investor has the option to buy at that low price. Therefore, patience is an important virtue when dealing with Mr. Market. What does it mean to become a part owner of a business? Think of buying shares as taking part ownership of a business. Think like an owner. Ask yourself, will the owner of this business sell shares projecting how economy will be 3 months down the line? This means having long-term view of the business and to understand the business deep before buying shares of that business. If you are a real investor, it should not bother you whether stock market exists for next 5-10 years.